Governor Gavin Newsom's special session proposal to penalize oil companies that, in his estimation, overcharge for gas is ready to go through the legislative process. This comes after Newsom says Californians have seen an increase in the prices they pay at the gas pump. 23 ABC's Brianna Polk spoke with the Western State Petroleum Association as well as a local assemblyman about the proposal. She joins us now in studio with the details. Brianna.
That's right, Mark. According to the governor's office, this proposal is to, quote, hold big oil accountable and would create a new independent watchdog within the California Energy Commission. This proposal would monitor California's petroleum market on a daily basis to ensure market participants, as the governor's office puts it, play by the rules. The governor's office says gas prices in the state reached an average high of $6.42 per gallon last fall, which is a record of $2.61 more per gallon than the national average. It goes on to say this spike in gasoline prices resulted in record refiner profits of $63 billion in just 90 days, which the office says disproportionately affects low and middle income families, drives inflation higher, and makes it harder for California families to make ends meet. However, Kevin Slagle, Vice President of Strategic Communications at Western States Petroleum Association, tells me the solution to high prices isn't more regulation, it's additional supply.
That we're isolated when it comes to energy. We don't have pipelines coming in from other states. As we transition to other forms of energy, we're going to need the fuels that we provide today. Until California addresses fuel supply issues and the public policies that have restricted production and constrained supplies of fuels, we're going to see these costs go up and down.
Newsom's special session proposal allows Senate Bill 2 to now move through the legislative process of committee hearings and votes. His office says that includes the CEC establishing a penalty structure that deters excessive pricing by imposing a civil penalty on refiners who charge more than a maximum allowable margin for the price of gasoline. However, Assemblyman Vince Fong says during the legislative process of this proposal, there is going to be what he calls a vigorous debate.
The idea that he can demonize the hardworking men and women of our community that produces reliable energy and powers our state every single day, and somehow create some type of bureaucracy that will allow faceless bureaucrats to increase energy taxes, that is not the long-term solution.
Slagle goes on to tell me the idea of creating a watchdog group that collects data and can find the industry is not going to help the state see lower costs.
We're not going to tax and create bigger bureaucracies and expect that we're going to have lower costs in the state. And that's the approach Governor Newsom is taking. He wants to create a new bureaucracy, 20 to 30 appointees that would have the power to investigate, to raise costs, impose taxes. And when you do that to a commodity, when we get to the pump, what we're likely to see are higher costs.
In response to the spike in prices, ultimately Fong says it boils down to investments and production.
And if we're serious about producing more energy, if we're serious about reducing the price of gasoline, if we're serious about creating affordable, reliable energy supplies, this is the wrong approach. We need to be investing in the pipeline infrastructure that gets oil and natural gas to point A to point B, and we actually have to produce more gasoline.
And the governor's office says this proposal also enhances the state's authority to analyze why California has seen unexplained higher gas prices since 2015 and enforce reporting requirements on the oil industry to provide greater transparency into California's petroleum market. Live in studio, I'm Brianna Polk, 23 ABC News, connecting you.
Brianna, thank you. Now let's take an in-depth look into oil production in Kern County. In terms of production, our county is the statewide leader. The county provides 70% of our state's oil and 2% of the nation's oil. According to data from the Kern Economic Development Corporation, as of last year, over 13,000 Kern residents were employed directly and indirectly by the oil and gas industry. Additionally, Kern County also supplies more than half of the state's renewable energy and has the largest wind farm in the country.